let's get more from our next guest. He's Neil Beveridge. He's senior oil and gas analyst at Sanford C. Bernstein. Thank you very much indeed for joining us. Let's just talk a little bit about the insatiable demand China has for energy.
Yes, well, I mean, China's energy demand is growing very, very strongly. Last year was one of the strongest years on record for oil demand, over 1.5 million barrels of incremental demand. This year, a little bit slower on oil demand, but what we are seeing is surging natural gas demand growing at 15–20% per year. We really are entering the golden age of natural gas in China.
Well, they still haven't done that deal with the Russians yet. That's not been signed, has it?
Yes, I mean, the issue on price still remains. They couldn't reach agreement on price in Moscow. The parties are still optimistic that they can have another go at this later this year, and still relatively optimistic this pipeline deal will be done eventually.
So they're turning to shale gas, and for some people who may be ignorant of that, such as me, what is shale gas?
I mean, shale gas is effectively gas that's produced from hydraulically fracturing shales. Hydraulically fracturing. So basically you explode the shale rock and you create fractures within the shale, which allows the gas to flow into the well. And it's been enormously successful in North America. It's been a real game changer in US natural gas, and probably one of the biggest breakthroughs in global energy over the last 10 years.
Right. I mean, but it sounds like it must have an environmental cost as well if you're exploding rocks.
Yeah, I mean, remember, these shales are relatively deep. They're at 3 to 4 kilometers depth, so they're significantly deeper than the water table. I mean, certainly there have been issues in the US, but, you know, by and large, these shales are at a depth where it really shouldn't affect the water table.
So it's not like oil sands, which are hugely environmentally destructive.
Exactly. I mean, oil sands are obviously much closer to the surface. I mean, I think the techniques for developing oil sands in a more environmentally friendly way are certainly being advanced. But yes, I mean, shale gas, you know, I think should be relatively safe given the depth of these shale deposits occur at.
Okay, so we've got China announcing it's the result of its first shale gas block auction. That's coming up later this month.
That's right. I mean, 4 blocks are on offer, and we have 6 companies competing for this. I think this is a highly prescient moment. This is the first shale gas licensing round in China, and really represents the start of commercial shale gas exploration in China. If this turns out to be significant in the US, it has very big implications for China energy.
Yeah, does it have implications for Western energy companies, though? That's the thing.
Yes, I mean, so far it's only been Chinese energy companies that have been allowed to bid for these blocks, but certainly a number of the Western majors are very interested in this. You know, this is the next frontier in shale gas globally. And I think you'll see companies like Chevron, Exxon, Shell really try and team up with some of the Chinese majors to get a share of some of the shale gas opportunities in China.
Is it fair to call it well, unorthodox gas, if you like, or unconventional gas as opposed to conventional LNG? And how does it compare on price?
Yeah, well, I think if you look at conventional gas versus unconventional gas, I mean, unconventional gas is more expensive. You need more fracturing of the rock, you need deeper wells, and you need new infrastructure. So this is going to be more expensive than conventional gas in China, but it's going to be cheaper than imports. Remember, imports of LNG and pipeline gas from Russia are linked to oil prices, and as we've seen in the US, the boom in unconventional gas has really managed to lower prices to the $4 to $5 range, which is a significant discount to oil. So, you know, if the same can be repeated in China, this really represents a big opportunity for Chinese energy companies.
Very quickly, how much of this stuff does China have?
It's early days yet, but according to the EIA, they think there's about 35 trillion cubic meters of reserves. Which, to put that in context, that's about 10 times larger than China's proven gas reserve base, and is higher than US shale gas reserves. If this was developed, it could potentially supply China with gas for 100 years.
So the winners out of this, Cnooc, you got an outperform one, PetroChina market perform, and Sinopec market perform as well.
Yes, that's right. All 3 companies are competing in the shale gas bidding round, but remember, it will take time before this really starts to move the production and earnings needle. We still like the growth profile for Cnooc over the coming years, and remember, it remains very linked to oil prices, which remain bullish on over the longer term.
Neil, pleasure having you on the programme as ever. Neil Beveridge there. Right, let's